Hello and welcome to another edition of Money Talks. We are here today with CPA Mark Alaimo originally from Lawrence, Massachusetts. Is that right?
Yes, sir. Yes, sir.
And is currently a shareholder of LCW. Mark, thank you very much. You bring over 20 years of experience with taxes in our conversation today. We appreciate your time. Mark, this series primarily speaks to real estate investors who don't have the traditional options necessarily for retirement. So what can you offer? We know you've been around the block. You've seen a lot of things. What can people do to set themselves up so that they can retire as a real estate broker, investor, or someone in this industry?
Certainly. Thanks, Matt. So again, there's lots of different options. And again, first and foremost, it comes down to determine what your goals and objectives are and what you kind of want to do. And then when that happens, there are a myriad of options. Most folks, when they start out investing in real estate, it is their side gig, and either they have a full-time job or their spouse has a full-time job. If that's the case, you're of course always permitted to contribute to a traditional IRA or a Roth IRA, depending on your income. And that's, I think it's around $6,000 a year at this point for people under 50 years old. There are also options as you kind of grow and evolve that you can set up a very simple management company structure whereby you can set up something known as a SEP IRA, which stands for self-employed pension, or even a solo 401k, which is much more feels like a traditional retirement plan you'd have in corporate America. Those can be set up and really allow you to defer significant sums off into retirement vehicles. Now, most real estate investors I know hate the stock market and would rather take their profits and reinvest them into another piece of real estate. But then they get to a point when, whether it's physically or health-wise or they're just done, they look at this and say, hey, I have this beautiful portfolio. I don't want to sell it because I have to pay huge capital gains taxes, but I want to retire. How do I do it? While most real estate investors have heard of the 1031 exchange, have heard how it works when you're selling one property and buying a replacement property to defer the gain. Well, you can also 1031 from real estate that you may own now or into a national REIT, a national real estate investment trust that invests in, could be 55 plus communities, could be hospitals, could be office parks. And these investments still qualify for 1031. They're professionally managed. You own the property with a myriad of other folks, and you receive a yield, a distribution every month akin to rent checks. And we hope that the property is also going to appreciate in value. There are not millions, but there are certainly significant amount of choices available based on the metrics of the deal. And then you can keep rolling that, keep rolling that, keep rolling that until you'd like to take money off the table if you want to take bigger sums. So there certainly are lots of options there. Don't just presume, hey, I'm a real estate investor, I can't save for retirement. Retirement's a necessity, whether we like it or not for most of us. So it's certainly something to think about. But again, before you start the process, either if you're single with yourself or with your spouse, first try to articulate what your goals and objectives are, and then bring the professional folks to help ferret out how best to execute those goals.
Thank you so much. That's super interesting. I've heard very little about the real estate investment trust, but they certainly sound like something I want to dive into a little deeper, and that's just another reason why we appreciate having you on the show. Thank you very much, Mark. And we'll see you all next time on another edition of Money Talks.